Assalamu alaikum. We are on revision of our financial statement. So let us discuss some adjustment. It will help you to solve the problem. Closing stock. Regarding closing stock, there might have two value. One may be market price, another may be cost price. So we'll consider the less value always. Maybe it is market price, it may be cost price, whatever it is. Only the lowest one will pick, and that one will show twice. One in comprehensive income statement, when we'll determine say OGS, that times we need to minus it. Again, it will be shown in asset in the financial position. Outstanding expenses. So we know our expenses. It may be salary, it may be wages, it may be house rent, it may be any other expenses. If any outstanding expenses is there, what we need to do? In the comprehensive income statement, we'll add with the related expense, and again it is our liability. We'll show it in the current liability. Outstanding expenses is our current liability. Expense paid in advance or prepaid expense. We may pay some expense in advance. Mostly we are paying for insurance and many other we may pay. So what is advance expense? Will minus it in the comprehensive income statement from the related expense, and again it is our current asset, so it will be shown in the financial position as current asset. Accrued income. Accrued income means outstanding income, that is we earned the income but still we didn't get it. So when we'll prepare our comprehensive income statement, we have to add it with related income. Again it is our current asset, it will be shown in the current asset in financial position. Then income received in advance or unearned revenue. Income received in advance, the other name for this is unearned income. That is, we already received the money but we didn't earn it yet. So this is advance. So from the related income, we'll minus it in the comprehensive income statement. Again it will be shown in the current liability. Depreciation. You know, on fixed asset we need to charge depreciation. It is another adjustment. It may be on furniture, it may be on machineries, maybe on office equipment, it may be on building. So depreciation we consider as expense, so it will be shown in the comprehensive income statement as operating expense, and as accumulated depreciation will show in the asset side, will minus it from the related assets. Now the most important adjustment for you, that is related to bad debt. most of you are doing mistakes in this adjustment, so please listen carefully. Let us take an example for that. We know in trial balance you will be given debtors or account receivable. Then you may given bad debt, you may given provision for bad debt. That is, the provision for bad debt shown in the trial balance is our old provision. This is the opening balance of provision for bad debt. Suppose here debtors is given 51,000 and old provision is given 2,000. In the adjustment, you are told 1,000 from the debtors not recoverable. Again, you are told to keep 5% provision for bad debt on debtors. So how we will calculate and how we will show it in our comprehensive income statement as well as in the statement of financial position. So we need to calculate new provision first. Let us see how we'll calculate this. Calculation of new provision for bad debt. We'll take debtors first, that is 51,000. Then from the debtor, we have to minus new bad debt. That is unrecorded bad debt, what is not collectible. That means from 51,000, if we deduct 1,000, we'll get 50,000. This 50,000 is our actual debtors now, and we have to create new provision on this amount. We are told to keep 5% provision on this amount. So if we calculate 5% on 50,000, we'll get 2,500. So this 2,500 is our new provision. That means this amount will be old provision for next year. This is new provision for this year, and this will be the closing balance for this year. Now let us see how we'll calculate the amount what will be shown in comprehensive income statement. That is the amount to be shown in comprehensive income statement. First, we'll write new provision for bad debt, what we calculated, that amount. This 2,500, it is new provision for bad debt we calculated just now, and this will be the closing balance for provision for bad debt. From this, we'll adjust the previous balance and how much we written off. So less old provision. This old provision means the opening balance. It was given in the trial balance. It is 2,000. From this 2,000, this year in the adjustment we were told that 1,000 from debtors not realizable. That is our new bad debt. We need to write off this one. So this 1,000 we have to deduct from this old provision. Then we'll get the balance. That balance is 1,000. That means from our old provision, that is the opening balance, we'll minus the new bad debt. Then we'll get the balance. That balance we have to adjust with the new provision. Our new provision was 2,500, and this from this 2,500 we need to minus the balance. That balance if we minus, we'll get 1,500. So this 1,500 is final balance what will be shown in the comprehensive income statement. This amount will be shown in the comprehensive income statement. So this way only you can write. That is, first you will write new provision for bad debt. From that you will minus old provision. Then from the old provision you have to minus bad debt written off also. The balance will be deducted from new provision, and how much the balance is coming, that much you will show in the comprehensive income statement as an expenditure. It is our operating expense. Now, how we'll show it in the financial position? Just check. The way we calculate it, the same way we can show in the financial position. That is, we'll write debtors or account receivable 51,000. We'll minus new provision, that is new bad debt 1,000, and the remaining new provision for bad debt 2,500. This one will minus and we'll get 47,500. This 47,500 will be shown in the final column of our financial position. But one thing we need to consider, that is, sometimes in adjustment you may told unrecorded sales, that is unrecorded credit sales was there, or unrecorded sales return was there. While we'll consider the debtors or account receivable, that times we need to adjust that things also. That's all. So take preparation accordingly. Thank you.